What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at Clii, which is merging with Evgo. They are an electric vehicle charging company that specializes in the fast charging, which I am the most bullish on. We've got a lot of competition out there in the EV charging industry, so I wanted to give you my thoughts on these guys, and kind of tell you where I think it's going. So let's jump right in. Alrighty, guys, before we get started today, subscribe to the channel for me. We're so close to 1,000 subscribers. I do want to say thank you guys so much. I really appreciate all of your guys' support. Growing the channel has just been amazing. You have no idea how much it means to me. There's also a link down in the description to my Patreon account. Come join the family over there. I did the first 50 patrons for just $1. I had no idea how quick it was going to fill up. I think we've got about 5 or 10 spots left. That's the day one squad right there. It'll be $1 forever. I just wanted to show some love to my day one subscribers and supporters. But you'll get access to the private Discord where we talk stocks. You'll get links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send out a notification so you can follow along with that. So if that's something you're interested in, come on over. Come join the family. We'd love to have you. I do want to say real quick, thank you so much, current patrons. I love you. But let's jump in, guys. So a couple of things here real quick. So obviously the EV charging industry, the EV industry, the renewable energy, green energy is growing rapidly. We invest into a lot of renewable energy and green energy companies. We've got, a lot of the EV companies. We do not currently, I do not currently own an EV charging company at the moment. I did own ChargePoint, but I do not currently own it anymore. The EV charging is one of the most competitive industries in the renewable and green energy and clean energy industry. I mean, it is just fierce. There's been so many different charging companies going public through the SPACs. There's a ton of them on the market right now. It's hard to know which one to invest into. So I wanted to at least give you my thoughts. I am very bullish on the DC fast charging. I think that is going to be a huge part of charging because humans, as our nature, is impatient. We would rather have things fast than slow any day of the week. So I do like the fast charging. I did say in the Patreon last night to everybody that, sometimes the most obvious option is not always the best option. I know that ChargePoint owns the biggest percentage of market share when it comes to charging. I do think that they will do very well. But again, sometimes the most obvious isn't always the best. And so, I don't currently own any of them, but I do like this one a lot. And so let's jump in. We'll take a look at the website. We'll go through some of the investor presentation. We'll take a look at the numbers, take a look at the chart, and we'll wrap it up. I'll try to keep this one kind of short today. We'll move quick. So let's jump in. Okay, guys, so this is their website. You can go on here and check it out. You can see here they do business, commercial, fleets, automakers, drivers. They've got, this is pretty cool, more than 130 million people in the US live within 10 miles of an Evgo fast charger. But yeah, if you want to, see a little bit more, learn more about the company, you can come to this website and check it out. They've got a, lot of information on here that kind of goes through everything. If you want to go to the investor presentation, just go to the investors tab. It's right in there. But let's take a look at the investor presentation. So I wanted to show you a couple of things in here, guys. So obviously the EV charging, the EV industry is growing rapidly. As you can see here, $300 billion of OEM commitments. The government commitments to zero emissions. There's California plus 14 other states that have commitments to go, carbon neutral or zero emissions. 12 million EVs in the fleet commitments by 2040. So between all of these different companies that are making commitments, there's over 12 million EVs. 100-time expansion on EVs on the road by 2040. Like that, those are some bullish outlooks. To get all of the internal combustion engines off the road, is going to be tough to do. Obviously, I don't think it'll ever be all of the internal combustion engines will be gone, at least not in my lifetime. I think it'll be after my lifetime, but I think we will get to where a majority of the vehicles on the road are electric by 2040 for sure. But this right here, so it says the DC fast charging needs to increase from 5% to 40% by 2040 because there's just not enough fast charging out there right now. These guys are, it says right here, Evgo owns the largest U.S. public DC fast charging network. The Evgo partnerships, they've got, OEMs, fleets, ride shares, so like Nissan, BMW, GM, Avis Car Rental, the ride shares like Lyft and Uber. And then the other thing is they can charge any EV. It says right here, Evgo can charge any EV. They've got something going on with Tesla. I don't know if it's like a proprietary thing, but they've got an adapter that they can hook right up to Teslas and charge those. Again, guys, I think the DC, the fast charging, when you go to a grocery store, I understand that, the slow chargers keeps people at those grocery stores longer. They spend more money. But as a consumer, most people will probably have chargers at their home. So they'll plug their vehicles in every night. But you got to think about it when you're out there on the road. I mean, if you have the option to go to a charger that's going to charge your car in minutes versus hours, you're going to take the minutes. That's just, in my opinion, that's what you're going to do. Then you start looking at rideshare companies and rental car companies. They don't have time, especially like rental car companies and rideshare companies, to let their cars charge for hours. They need them in, charged up, and back out on the road as soon as possible so that they're not just sitting there. A couple of things here. This is a map with a couple, statistics on here. So they've got over 800 charging sites, the number one in fast charging. So the number one company in fast charging. They've got 1,400 plus current DC fast chargers. So 1,400 individual chargers at over 800 sites. They're doing a deal with GM. This is huge right here. They're going to do 2,750 DC fast chargers to be added under the GM contract. That will more than triple the size of their company just off one contract with GM. So that's huge. Obviously, if they don't get that or something falls through with that, that could be bad news, but that will be huge. The only charging partner engaged by multiple OEMs to build out the DCFC network. They're also the only charging company that are 100% renewable energy powered. So their stations are fully integrated, and they're the only ones that are powered by renewable energy. That is huge. Like I've made a couple videos on like Nuvve and SNPR, Volta, but Nuvve has the vehicle to grid technology going for them, which I am very bullish on that. I think that's huge for converting people over to EV, because if they can create revenue from it, that's huge, especially fleet operators and things like that. They can partner directly with them. But the renewable energy powered is big. I mean, that's the whole goal of going electric and going green energy. They've also got over 220,000 active customers. I would imagine that, downloaded the app and uses their charging stations. They're in 34 states and 68 major metropolitan areas. 83% of Californians live within 10 miles of an Evgo charger, and 41% of Americans within 10 miles as well. Now, obviously, I would imagine more than half of Americans live in these areas. Up in here, a fraction of the Americans live in areas like this, but still, that's pretty impressive. They own 50% of the retail DC market. That's huge. So like the general consumer retail, market, placing them out, gas stations or grocery stores and stuff like that, 50% of that market's big. They've got 45% year over year retail put through growth and a 48% direct margin year to date in 2020. That's pretty huge. Next thing we want to take a look at here is the charging times. Guys, like I said, these are all the different charging vehicles or EV vehicles that are ready to be charged. So you've got your sedans, your crossovers, your SUVs, your pickups, delivery vans, and then your medium to heavy duty vehicles like semis and garbage trucks and stuff like that. Just look at the difference here between like level 1, level 2, and the fast charging. As you can see here, I mean, level 1 charging, I would imagine those are the chargers that are at people's houses. That's some serious time to charge 100-mile charge time. 17 hours, 35 hours. Look at even the level 2 cuts it in half, more than in half. And then the fast charging does it in minutes. So that's massive, guys. I mean, like I said, if you can choose between hours and minutes, you'll take minutes every time. So that's really impressive. Next thing we'll look at, this is, pretty impressive here. Evgo is the only pure play DCFC owner and operator with fully integrated network. And then it says right here, during the first half of 2020, Evgo's California network utilization was 5 times its nearest competitor. So they've got a big head start on the closest competition in the fast charging. Obviously, when you get that far ahead, it's hard to catch up. So that's what I really like that about these guys. I like that they're well positioned. I like that they're a pure play on fast charging. Gives them the ability to really double down on that. I like the fact that they're all 100% renewable. I'm really liking what I'm seeing with this stock. If I am to pick a charging company, my top 2 right now are Nuvei and CLII. As of right now, again, I like ChargePoint, but I like these 2 a little bit better. So these right here are the commercial relationships with the different OEMs and fleets. So they've got a partnership with Nissan, BMW, GM, Hyundai, Kia, Tesla, and then this is the fleets. So they've got Lyft, Uber, car rental companies, they've government agencies, and then these are retail like host areas like Walmart, Albertsons, things like that, where they put the chargers in their parking lots. This was the other thing I wanted to show you guys right here is the rideshare, how important this fast charging is for ride sharing companies like Uber and Lyft. It says right here, each driver adds 2 to 3% utilization to an Evgo charger, and DC fast charging is 75% of total rideshare usage. Like I said, rideshare companies, they've got to be able to get those cars charged quickly or they're not making money. You don't have the ability to go drive, and then sit for 4 hours while your vehicle's charging. So fast charging is big in rideshare. That's an ever-growing industry as well, partnered with some of the biggest rideshare companies like Lyft and Uber. We'll take a look at the financials, then we'll jump into the chart and we'll wrap it up. So as you can see here, in 2020, they only did 14 million, which was actually less than they did in 2019, where they did 18 million because of COVID. They're looking to jump that up to 20 million in 2021. And then look at this scale: 54, 166, 326, 596, almost $1 billion by 2026, and 1.2 billion by 2027, which is big guidance, obviously. But with them being the number 1 and the leader in fast charging, they could potentially do it. Now, that's some massive scale there, but I think that GM deal is going to play a huge role in getting to these numbers. Any partnerships with any OEMs is going to really help drive that revenue. If they can hit this guidance, the stock will do very well. So the fundamentals look okay, guys. Obviously, all of these EV charging companies are low revenue, high valuation, high multiple stocks right now. As the industry develops, I think we will start to see those valuations adjust a little bit, as time goes on. So, all right. So as you can see on the chart here, I mean, just like all of the other EV charging SPACs, they came out, gapped clear up, probably on news of the merger, reached a high of $24.34. And then right there at the end of January, just started selling off like crazy, gapping down. Then came all the way down here and hit a low of $10.56, which is almost at that NAV price. Now, one thing I do like here is, as you can see, it never really fell past its mid-March lows. Like I've said in the last couple of videos, the stocks that got pushed down way past their mid-March lows in April are the ones that are starting to see those short squeezes. So that is nice to see that it did hold at that, $10, $11 level, didn't get pushed down past the NAV price like, Lightning E-Motors did. Now, the one thing I'm not really liking here is we've got this hidden divergence right here. Now, it is hidden divergence, but it is divergence nonetheless. That is a continuation pattern and it's bearish. That's a bearish hidden divergence, as clear as day. So we could see further sell-off where it could come back down here and retest this $10.95 range. Now, I would like to see it do that so that you can get a better entry price. It is, starting to kind of hold at that moving average, but you'll probably see it come back down here and fill these gaps back up and retest this level. Once the merger completes, you'll see dilution. So if you don't have a position in it right now, I would recommend waiting, trying to get a better price down here before everything completes and it starts advancing again. So that's it for today, guys. Overall, I love the stock. I think it is going to do very well. I'm loving the fast charging. I like that they're the leader. I like the OEM partnerships. I think they've got a very, very bright future, especially if they can hit their revenue guidance. They've got some big projections, and with those different partnerships, like with GM, I think that they can do it. Overall, guys, I would see this stock being, a $17 to $18 stock by the end of the year, and I could potentially even seeing it getting up around $28 to $30, within the beginning to middle of 2022. So this video is for entertainment purposes only, guys. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. If you have any questions, put them down in the comments. I'd love to talk with you. If you agree with me, I'd love to hear it. If you got a price target, I'd love to hear it as well. If you disagree with me, let me know. I'd also love to kind of hear your points. But come over and join us at the Patreon, guys. We would love to have you. Like the video if you get any value out of it. Go out there and have a wonderful weekend, and I'll see you guys in the next one. Peace.